What if I told you that Ghana's banks are sitting on a mountain of bad loans worth billions? This is Kenya News Update today. Coming up, you'll discover why nearly 1 in 5 loans is toxic, how banks are writing off billions, and what this means for your money and the entire West African economy. Meet the Bank of Ghana, the financial watchdog. In December 2025, they dropped a bombshell report. The non-performing loan ratio, that's loans that aren't being paid back, improved to 18.9%. That sounds good, right? But here's the twist. That number is still dangerously high. It's down from 21.8% in 2024, but it means almost 19% of all bank loans are essentially rotting. And the banks had to take a massive hit. They wrote off a staggering 1.39 billion Ghana cedis as bad debt in just 10 months of 2025. That's a 56.7% increase from the previous year. But here's what nobody's talking about. While banks are writing off billions, the government wrote off even more. In October 2024 alone, the government wrote off 3.22 billion cedis. That's a massive burden shifting from private banks to the public purse. And then something shocking happened. The central bank says the sector is still strong, profitable, solvent, efficient. How is that possible with so many bad loans? The answer is in the assets. Total bank assets grew in 2025, driven by your deposits, domestic borrowings, and shareholder funds. They didn't just sit on the money. They poured it into investments, which increased significantly. It's a high-wire act, using new money to cover old, rotting debts. But here's the part that will blow your mind. The Bank of Ghana is betting on a double strategy to fix this. First, ongoing policy measures. They're cracking down on willful defaulters, enforcing strict credit rules, and trying to clean up legacy loans from the past. Second, they're easing the policy rate. That's the interest rate they charge banks. The theory is simple. Cheaper money for banks means they can lend more easily to businesses and you. It's supposed to support credit and strengthen the whole financial system. But if you're a regular Ghanaian or Kenyan watching this, you're asking one question. What does this mean for me? The implications are huge. If banks are scared of bad loans, they stop lending. Businesses can't grow. Jobs aren't created. The entire economy slows down. It's a silent crisis. Some say the cleanup is working, pointing to the drop from 21.8 to 18.9%. Others say a nearly 19% NPL ratio is a ticking time bomb, and writing off billions is just sweeping the problem under a very expensive rug. The controversy is real. Is this financial prudence or a desperate cover-up? The central bank promises further improvement, but the unanswered question remains. Who ultimately pays for these billions in written-off debt? The banks? The government? Or will it be you, the citizen, through higher fees, tighter credit, or even a future bailout? This story started with a shocking fact. A mountain of bad loans. We've seen the bank's desperate write-offs, the government's even bigger write-offs, and the central bank's risky balancing act. The hook was the hidden danger in what looks like good news. So, do you think writing off billions is the right way to fix a broken banking system, or is it just creating a bigger problem for tomorrow? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking financial news from across Africa.